Dear friends, I am Pramanshu from Team 84 Pillars. A warm welcome and greetings from our team to all our viewers. We create pillars for investors to build magnanimous portfolio. To begin with, we have a question. What makes a company valuable and why it will be more valuable tomorrow than it is today? The answer lies in its earnings. Remember the rule, follow the earnings. Today, we will be analyzing Manappuram Finance Ltd, a mid-cap and one of the leading gold NBFCs under the financial sector. Is this the next multi-bagger in making? Or is it going to be the next Bandhan Bank or the next Bajaj Finance? Many questions will come up and will be suitably answered if we dig deep into the history of this company that had its modest beginnings in 1986 in Kerala under the ambitious Mr. VP Nandakumar, its current MD and CEO. In this short video, we will be covering the basics of Manappuram Finance Ltd, its business, management composure, future overview, and historic parameters in a way so that maximum audience is benefited. Manappuram started from one branch in 1992 and currently has 4,622 branches. It is also the first Kerala-based fund to receive foreign institutional investor investment to the tune of Rs 12 billion way back in 2010. Currently, it has an AUM of Rs 252 billions as on today. The company's business is very simple. They borrow long-term loans from institutions and investors. Their customers take short-term loans against gold and pay them interest. They earn in between. Earnings were Rs 1.6 billion in July 2017 and currently stands at Rs 4 billion now. 2.5 times growth in 4 years. During the same period, the number of active customers also rose more than 2.5 times from 2.06 million to 5.14 million, and in doing so, they needed to add just another 1034 branches during the same period. An interesting point to note is that during the same period, they reduced their cost of borrowing from 10.4% to 9.46%. The management consists of people from their respective areas of expertise with years of experience like any other growing company. From 2017 onwards, they have invested heavily into technology-driven solutions like online gold loan, cellular secure vaults, IoT, and cloud-based solutions. Digital inclusiveness was mentioned in their 2016-17 annual report. Digital gold loan constitutes almost 66% of their business. Cellular secure vaults, cloud-based business model, and other such measures have contributed heavily to their earnings. And similarly, these measures have also reduced their operational expenses to 7.2%. Shareholders have reaped benefits along. With decreased expenses and increased profits comes increased earnings. Risk mitigation and risk management had also been catered in the process with strong liquidity, well-capitalized balance sheet, high credit rating, and expansion into unpenetrated segments. The company is reducing its dependency onto southern states, whose contribution to the revenue is almost 44%. Currently, the company has its presence in 28 states and union territories across India. The online gold loan feature allowed them to disburse a loan of around Rs 200 million during the lockdown period from April to June 2020. The company had only been in the gold loan segment, and hence to relieve itself of its constraint, they diversified with acquisitions and has 4 subsidiaries, namely Ashirwad Microfinance, Manappuram Home Finance, Manappuram Insurance Brokers, and Manappuram Comtech and Consultants. In 2015-16, the gold loan portfolio was close to 90% and now it stands at 66.67%. Diversification has its own virtues and pitfalls. Not all the subsidiaries have brought stupendous success till now, but surely have opened untapped avenues into other segments. The company has set a target of enhancing its non-gold portfolio from current 33% to around 45% of its total portfolio in the coming future. Now, let us look at some easy to understand numbers. Its ROE and ROCE currently stand at 22% and 15% respectively. Compounded ROE was 18.5% for the last 5 years. During the last 5 years, the compounded sales and profit growth has been 14.5% and 32.5% respectively. Historically, the current PE ratio of 9.2 is near its tail end, and 10 years back it was as high as 64. It has a median PE ratio of 13, and EPS for the financial year 2019-20 stands at Rs 17. Compounded growth has been over 35% in the last 5 years. FII holds 39% holding in the company, DIIs around 9%, with promoter holding at 35%. Promoter holding has increased considerably over the last 5 years, with the lowest being at 26%. It is yet to be ascertained how the company suffered during the corona pandemic. Will loss of employment and livelihood of those who might have taken loan affect the business adversely? Will the NPAs that had just been under a percent since its inception will rise above ordinary and erode upcoming earnings? This will soon be ascertained by the quarterly numbers. Average loan size has been around Rs 32,000, and the gold loans are for very small period of 3 months. Debt to equity is another concern, but agreeable and acceptable in this model of business. The company is well established to play a role as a banking entity due to its business presence in lending segments. If that happens, its borrowing cost could decline further, since the company would then be able to take in deposits from prospective customers. However, it is a hypothetical scenario, and it depends on the future plans of the company. On the other hand, if it keeps expanding by venturing into untapped markets of the North, East, and establishes itself among the leaders in the sector, it may well enter the large cap stock section. Do share your thoughts on this analysis of what you feel shall be included. This was a brief analysis, and in the upcoming weeks, we will post exhaustive analysis. Post in your comments so that Team 84 Pillars digs deep down. In a series of videos, the aim is to make things easier and happier for the general investor. Remember investors, the same background check and investigation that is needed to buy a house or a plot is required while buying a stock. Care to spread around word for us if you like the content and analysis. Stay home, stay safe. Good day, happy